Did you know that Tesla, despite generating billions in US income, paid an effective federal tax rate of just 0.4% last year? Stick around to find out how they managed it and what it means for the future of corporate taxation. Welcome to the Tesla Daily News. This podcast is created by Generative AI. Today is January 31st, 2025, and we've got a lot to unpack about Tesla's financials, tax strategies, and future plans. Links to all the stories can be found in the episode notes. Let's dive into Tesla's tax situation, which has been making waves. Despite earning $2.3 billion in US income in 2024, Tesla reported zero federal income tax for the year. Over the past 3 years, the company has accumulated nearly $11 billion in US income, but has paid only $48 million in federal taxes, an effective tax rate of just 0.4%. This is a stark contrast to the statutory corporate tax rate of 21%. How did they do it? Tesla employed a mix of tax strategies, including accelerated depreciation, tax breaks for executive stock options, and other US tax credits. For instance, in 2024 alone, they saved $500 million through depreciation and another $250 million through stock option tax breaks. Additionally, net operating losses helped offset their current income. And here's the kicker. A recently passed bill could retroactively allow Tesla to save up to $2.4 billion more by reinstating full expensing of research and development costs. This has sparked debates about corporate tax practices and whether the system is effectively ensuring that profitable companies pay their fair share. Now, let's talk about Tesla's financial performance in 2024, which was less than stellar. The company reported a 71% drop in net income for the fourth quarter, down to $2.3 billion, despite a slight increase in revenue to $25.7 billion. Analysts had expected better, with revenue projections of $27.26 billion. For the entire year, Tesla's net income was $7.1 billion on $97.7 billion in revenue, marking a 6% decline from 2023. A significant chunk of their Q4 profits, $692 million, came from selling regulatory credits, a revenue stream that could be jeopardized by potential changes to emissions programs under the Trump administration. Automotive revenues fell by 8% in Q4, while energy and storage revenues saw a 113% increase, albeit totaling just $3 billion. Overall, Tesla's total revenue grew by only 2%, and their operating margin dropped to 6.2%, below the industry average of 10%. Despite these challenges, Tesla is not standing still. The company is working to reduce the cost of goods sold per vehicle and plans to launch a more affordable electric vehicle later this year. This move is crucial as competition heats up, especially in China, where domestic automakers are gaining ground. Investors are eagerly awaiting more details on Tesla's plans for affordable models, particularly after previous commitments were shelved. Tesla is also expanding its manufacturing footprint with new factories in Shanghai and Nevada, and the highly anticipated Cybertruck is expected to qualify for a federal EV tax credit. However, the future of such credits remains uncertain due to potential political shifts. On the technology front, Tesla continues to make strides in full self-driving (FSD) capabilities. Drivers have now logged over 3 billion miles using the system, showcasing its growing adoption. This advancement is part of Tesla's broader investment in AI and robotics, which has contributed to increased operating expenses, but is seen as a long-term play for the company's future. Looking ahead, Tesla has set ambitious goals for 2025. The company predicts that energy storage revenues will grow by at least 50%, and automotive sales will increase by over 60%. These forecasts are bold, especially given the challenges Tesla faces in maintaining its market position and the competitiveness of its model lineup. Interestingly, despite the disappointing financial results for 2024, Tesla's share price rose in after-hours trading, suggesting that investors remain optimistic about the company's future prospects. That's all for today's episode of the Tesla Daily News. From tax strategies to financial challenges and ambitious plans for the future, Tesla continues to be a company that sparks both admiration and debate. Don't forget to check the episode notes for links to all the stories we covered today. Thanks for tuning in, and we'll see you next time.